Brad, talk me through the first half of the year. How's it been?
Yeah, it's been a great set of numbers that we've delivered this morning. Our people have worked very hard over the last 2 years to get to this position, and we're very happy with the direction of the business. It was a very strong first half. Gold production at 412 was where we said it would be, or slightly above. The second quarter in particular was very strong, 222,000 ounces of production. North Mara had a record quarter at 100,000 ounces, and costs were dramatically improved from where they were. The headline number on all-in sustaining cost was $926, but if you take out the mark-to-market on the share-based payments, then we're sitting with an all-in sustaining cost of $854 per ounce, which is a great achievement. So very happy with where that has gone. North Mara in particular, with that record quarter, is demonstrating just how good that asset can be. We've often focused on Bulyanhulu as one of the best assets, gold assets in the world, but North Mara is demonstrating that it can be as good as Bulyanhulu. And after all of that, we saw net cash increasing by 62% from where we were at the end of the year. So a very strong first half, very strong second quarter. We're quite happy about that.
What has that meant for the financials?
Yeah, we should put this in context because the gold price hasn't increased much first half 2015 to first half 2016. So it's actually been quite flat. So in that context, we've seen earnings up 3 times. We've seen EBITDA up 91%. Free cash flow post dividends at $47 million was extremely strong. We now have one of the best free cash flow yields in the business. And if you look at where we were 3 years ago, our all-in sustaining cost was double where it is today at that underlying number of $854. So it's going very well.
With the higher gold price, are there any changes you're looking at in terms of the allocation of capital?
No, certainly not. We believe capital allocation is one of our strengths. So we'll remain disciplined. The gold price climbs, we will take the margin. And that's something that we've been very strong on. We're generating a lot of cash in the business, obviously. We will invest that in the exploration portfolio. We've been contrary on exploration, so we'll continue to do that. We see significant brownfields growth, both at Bulyanhulu, with a potential parallel mine there, but also North Mara, and developing that into 2 significant underground gold projects. So brownfields growth is obviously another area where we'll allocate cash. And then, our first call on cash is to dividends to shareholders. We've increased the dividend in the first half by 43%. We will continue to pay dividends in the 15 to 30% range of free cash flow, and that's the primary call on our cash.
You mentioned about being contrarian around exploration. How's that working out for you?
Look, I think we've got one of the best exploration portfolios in the gold business. We'll continue to be contrarian. We're starting to see some good results from our exploration project. It's a long-term game, exploration, so quarter on quarter we see incremental improvements, but we're starting to see some very good results coming out of Kenya. We're getting some results now coming through from our projects in Burkina Faso and Mali. Throughout Africa now, we've got 10 drill rigs drilling, and there aren't too many gold companies that can say that they're investing in exploration to that extent. We'll continue to invest in exploration at a similar budget to what we have today. We will continue to put our foot on good acreage, and we've put our foot on some of the best exploration ground in Africa. We did a 4th deal in Burkina Faso during the second quarter. You'll probably see us do another deal or 2 before the end of the year, before that window closes and other gold companies get into investing in exploration. But at the moment, we've got no competition, so we'll make hay while the sun shines.
There's been a lot of talk in the first half about tax. What's the situation there now?
Yeah, we've got a new government in Tanzania, voted in late last year, so they're looking at balancing their budgets and getting their revenue right. So we have spoken to them about prepaying some corporate tax. We will prepay $20 million worth of corporate tax this year. And remember, that's in addition to $100 million that we already pay in other taxes and royalties. We've had a couple of adverse rulings in the Tanzanian courts on tax, but we'll address those with the relevant authorities and go through those processes as we should. We want to be a good corporate citizen. We've been in Tanzania now for more than 15 years, and we'll probably be there for another 30 or 40 years. So we'll continue to develop those relationships.
What is the outlook for the rest of the year? Any changes?
No, as you can see, we've had a strong first half. We're tracking well on production and costs. So we expect to be on production at the higher end or slightly above the range, at 750 to 780,000 ounces a year. And then correspondingly, we'll be at the lower end of the all-in sustaining cost range at around the $950 per ounce. The assets themselves are performing well. So individually, they're going to be where we said they would be at the end of the year. And Bulyanhulu now has delivered 9 months in a row. So we're seeing some stability in our operating performance year to date, and that'll continue for the rest of the year.
Now the business is performing. What's the longer-term vision?
The business has progressed a long way from where we were a few years ago, obviously. Today we're in a strong position. In 5 years' time, I can see Acacia being in an even stronger position. We have two of the best assets in Africa at Bulyanhulu and North Mara. At Bully, we potentially see that with a parallel mine on the second reef system, expanding beyond that 350,000 ounces a year. In North Mara, 5 years' time, I see that as two underground operations. Gakona, we're getting excellent results from. Ultimately, it could be Gakona underground and Rama underground for a long-term mine life. And then, the investment that we're making into exploration, we'll start to reap some rewards from that investment and that contrarian strategy. So we've got exploration assets now in Kenya, Burkina Faso, and Mali. So in 5 years' time, we could have one of those projects coming through to construction and another one closely behind it in feasibility. So Acacia will be one of the best gold businesses in Africa in 5 years' time, if it isn't close already.
Brett Gordon, thank you very much.
Thank you.